Okay, so very good afternoon, all of you. So we will start, and today will be the last lecture. We are going to finish the syllabus. Okay, so as I promised yesterday that we are going to solve few questions on computation of total income, that will take care of your deductions also. Okay, so starting from your chapter number 6, which is there in your ICI study mat, module 2. Okay, so in that module, this chapter is there, deductions from gross total income. Okay, see, the deductions which are there, they are given in chapter number 6A, chapter 6A of the Income Tax Act, chapter 6A of the Income Tax Act. Okay, so if you will see the deductions, how many deductions are there? Number one, ATC, triple C, CCD, CCE. Then after ATCCE, ATCCH is also there. Okay. Then ATD is there, ATDD, ATDDB, ATE, EE, EEA, EEB, GGG. And ATGGA, GGB, GGC, and ATJJA, ATQQB, ATRRB, ATTTA, ATTTB, and ATU. So if you see, if you count, there are around 20 to 22 deductions. Okay. Out of all these deductions, ATC, most IMP. In majority of the questions, you will get ATC deduction. Then ATD is also very important. Then if you will see, ATG is also very important. Okay. Now if you will, look at the questions of the past exams, previous year papers, or MTPs, RTPs, everywhere in almost majority of the questions, you are going to get these three deductions are compulsory there. Now in one question, how many deductions they will ask? In one single question of computation of total income, approximately 2 to 3 deductions will be there. So there will be a combination. ATC will be there, so along with ATC, other deductions will be there in the combination. Okay. ATD will be there, then along with ATD, other deductions will be in combination. Okay. So now what I am going to do, I am going to start solving the questions with you. Okay. And while solving the questions, what all important things are there with respect to the deductions? We are going to cover those things. Okay. So one by one, see, if I come to the deductions, ICI study mat. Okay. So illustration wise I am going. Okay. We'll start with the first illustration. Can you see the first illustration over here? Illustration. Sorry, illustration number 1 is, this is not that important. You can leave this illustration number 1. Go to illustration number 2. Okay. Now see, compute the eligible deduction under section ATC for the assessment year 25-26 in respect of life insurance premium paid by Mr. Ganesh during the previous year 24-25. The details of which are given here under if Mr. Ganesh has exercised the option of shifting out. Now before moving ahead, one very important thing I would like to bring to your notice, that whatever deductions which are there under chapter 6A, you are going to learn those deductions and you are going to apply those deductions only if the assessee does not follow default tax regime, means he shifts out. Okay. But if the assessee does not shift out, if the assessee, he remains in the default tax regime, then all these deductions are not allowed, except for 3 deductions. So he will get the deduction under ATCCD subsection 2, ATCCH subsection 2, and ATJJA. These 3 deductions will be still allowable. So can I say these 3 deductions are allowable whether you follow 115 BSE or you don't follow 115 BSE? ATCCD 2, ATCCH2, and ATJJA. Yes or no? And if other deductions are there, other deductions other than these 3 will be allowed, will be only if you shift out. Only if you shift out, you don't follow 115 BSE. Now in the question they are saying that you are supposed to calculate the deduction under ATC, assuming that the Ganesh has exercised the option of shifting out, meaning he is following 115 BSc or he is not following 115 BSc. Not following 115 BSc, meaning he will be eligible to take the deduction under ATC. Now in that case, how much will be the amount of deduction under ATC if he has paid these premiums for these policies? Now if you remember ATC, this is not the first time when you are listening about ATC. Okay. So ATC is a deduction which is available to individual or HUF, whether that individual is resident or a non-resident. Okay. Now when he will get that deduction? When the assessee will get that deduction? Assessee will get that deduction only if he has made certain payments, certain specific type of payments or investments which are specified under section ATC. Like which payments are specified? Like life insurance premium, if you will pay, you will get the deduction under ATC. If you are an employee, you are contributing in your provident fund like SPF, RPF, then ASF, then whatever contribution goes in your provident funds, even that contribution will be allowed as a deduction. If you have children and you are paying tuition fees of your children for their full-time education in any school, college, university in India, then that tuition fees will also be allowed as a deduction under ATC for maximum 2 children. If you have taken a house property and that house property you have shown under the head IFHP, and for that house property if you have taken a loan, and that loan repayment etc. you are doing, then that loan repayment will also be allowed under section ATC. So there are certain payments, certain type of investments which are specified under section ATC. Now the list of that payment is there. I am not supposed to get into detail into those things. You have to remember that list of payments. Okay. So today what I am going to do, after my lecture, I am going to share all my handwritten notes with you. Okay. So sit today and go through that list. In that list you will get what types of deduction. First one is life insurance premium. Then second one is non-commutable deferred annuity plan. Then it is a deferred annuity plan. Then it is Sukanya Samriddhi account. Then it is payment for provident fund. Then it is payment or deposit in public provident fund. Then if you are contributing in the notified units of UTI or mutual fund, then you are contributing in ULIPs. All those payments are given. So the list you are supposed to see from there. Okay. Now from that list, any of the payments or any of the investments are done during the previous year. Then total amount of investments or payments which are specified under section ATC will be allowed as a deduction under section ATC from your GTI. But the maximum deduction cannot be more than 1,50,000. This is ATC. But when you will see under ATC, if you make the payment for life insurance premium, you are making the payment for life insurance premium. So you should pay that premium for yourself, your spouse and your dependent, and your children. Children may or may not be dependent. Spouse may or may not be dependent. So whatever premium on the life insurance policy you are paying for yourself, your spouse and your children will be allowed as a deduction. And if you are HUF, you can pay the premium for any of your members. Yes or no? Then that premium will be allowed as a deduction. But that premium should be in limit. That premium should be in. And I have already told you those limits. 20% of capital sum assured. If the policy is taken on or after 1st April 2003 till 31st March 2012. If the policy was taken on or after 31st March 2012, then 10% of the capital sum assured. If the policy was taken on or after 1st April 2013 for a handicap, then it is 15%. But for normal person, it is still 10%. Yes or no? So you have to check that when the policy was taken and what is the maximum premium which you can pay. If the premium paid is over and above that limit, only to the extent of that limit the amount can qualify under section 80C. Okay, no? So that is about what? Life insurance premium, which you can claim under section 80C. Now see, life insurance premium can be paid to any insurance company. It can be paid to LIC also, it can be paid to any insurance company also, yes or no? But remember that whenever you are paying the life insurance premium, there is no requirement that the premium should be paid by prescribed modes other than cash. Even if the life insurance premium is paid in cash, still it will be allowed as a deduction. The restriction is on medical insurance premium. That medical insurance premium should not be paid by way of any mode other than, should not be paid by way of cash. It has to be paid by any mode other than cash. Only then the medical premium will be allowed under section 80D. But that restriction is not applicable for life insurance premium. Now who is the assessee? Come on, tell me. Assessee is individual. Assessee is individual. Now tell me, is this individual making the payment of premium? Premium is paid for self. Self means his own policy. For his policy, whatever premium he is paying, will that premium be allowed under 80C? The answer is yes. For self, he can pay the premium. For spouse also, he can pay the premium. And for his children also, he can pay the premium. Now whatever premium he will pay will qualify under section 80C, subject to what? Limit. So now tell me, when the policy was taken for self? 30th March 2012. Can I say between 1st of April 2003 to 31st March 2012? If the policy was taken, then what is the capital sum assured? 9 lakh. 20% of that? 20% of that. Maximum premium can be 1 lakh 80. How much premium you have paid? This is the maximum amount of premium which you are calculating here, right now. So maximum is 1 lakh 80. How much you have paid? 48. Is it paid within the limit? Full premium will qualify under section 80C. Now tell me, for spouse, how much was the capital sum assured? 1 lakh 50. And when the policy was taken? 1st May 2018. Can I say on or after 1st April 2012? On or after? And spouse is handicapped or a normal person? For a normal person, if the policy is taken on or after 1st April 2012, then the limit is 10%. So what is 10% of 1 lakh 50? So the maximum premium you should have paid how much? But how much you have paid? 20 will not qualify, 15 will qualify. Yes or no? Now, what is the date of policy for son? 1st June 2021. Can I say on or after 1st April 2013? The policy is taken for a person who is a handicap. And for such policy, how much premium should be paid? 15%. So take 15% of 4 lakhs. How much should be the maximum premium? But how much you are paying? 80 will not qualify, 60 will qualify. Now do you have all the qualifying amounts? Calculate. 48,000 plus 15,000 plus 60,000. They are telling you to compute the deduction under section 80C. Okay. So total amount is how much? 1 lakh 23. And how much is the maximum limit under 80C? 80C 1 lakh 50,000 limit is there. Are you paying the premium more than 1 lakh 50 or less than 1 lakh 50? Full amount will be allowed under 80C. Difficult? Now this type of question will not come in the exam. This is just a net practice. And if this will come, only one part will come in the exam as an adjustment in the main question. Getting my point? And if such type of question, if they want to ask, it can come as a case study for 2 marks MCQ. Getting my point? Hello sir. Next one. Did you understand? Now what would your answer be if Mr. Ganesh pays tax under? What will be your answer? The answer will be nil. Why? Because no deduction under chapter 6A other than those three will be allowed if he follows 115 BAC. Yes or no? Then he would not be eligible for deduction under ATC. Did you understand? Now let's go to illustration number 4. Now see, an individual assessee resident in India, has made the following deposits or payments during the previous year 24-25. He has contributed to, if you contribute any amount during the previous year in the PPF account, Public Provident Fund account, for yourself, for your spouse, or even for your children, that entire amount contributed will be eligible for section ATC. So will this amount be eligible for ATC? Yes, eligibility is there, amount is eligible. Next one, insurance premium paid on the life of spouse, this insurance premium will be allowed or will not be allowed? Will be allowed, because it is for your spouse. When the policy was taken? On or after 1st April 2013. And the spouse is not handicapped. Spouse is not. So how much premium should be paid? 10% of 2,20,000 will be 20. And how much premium you have paid? 25,000 will not qualify. 22,000 will qualify. So total payments specified under section ATC. How much of the total of such payments during the year? 1,72,000. 1 lakh will be allowed under section ATC, subject to maximum 1,50,000. So even though the payment is more than 1,50,000, sorry, even if both the payments are eligible, but still the total deduction will not be more than 1,50,000. Understood, sir? Understood? So 150 plus 22, total 172. How much will be the deduction? 1,50,000. Now this one by one, this list is given. See, contribution to Provident Fund, then this will be allowed. Contribution to approved superannuation fund, any sum paid or deposited in Sukanya Samriddhi account. All these payments, one by one, you have to read all these payments, because all these payments made during the year will be eligible under ATC. In some payment there will be a limit, like insurance premium is there. In other payments, the entire payment gets eligible. But out of the entire amount which is getting eligible, aggregate amount, you are going to get maximum 1,50,000. Will you remember this? Yes or no? Now let's come to the next part. Next illustration is yes, ATCCC, ATCCD and ATCCD1. Now pay attention. I would like to discuss ATCCD with you first. Okay. Then the next question I am solving, then it will be understood that what I exactly want to tell you. Okay, sir? Okay, sir? Shall I? Now pay attention. See, if you can see, ATCCD is there. In ATCCD, NPS account is there. What is there? So if NPS account is there and you are an individual, you contribute in the NPS account. You contribute in the, so whatever amount you contribute in the NPS account, payment made by you in your NPS account is known as your own contribution. Is known as, and if you are an employee, your employer also contributes in NPS account. If you are a government employee, then it is compulsory. You also have to contribute and your employer will also contribute. But if you are a private sector employee, then this NPS scheme is optional, voluntary. You and your employer both decide and then only you both contribute. So you can be a government employee also, you can be a non-government employee also participating in NPS. So can you contribute to your NPS? Yes. Then your employer will also contribute in NPS. But the benefit of NPS is not given for only those individuals who are employees. Even a self-employed individual can contribute in NPS. I don't have any employer. I am not working in a company as employee. But even then I want to contribute in NPS. Can I contribute? The answer is yes. Even I can contribute. And now if I want to contribute, I will contribute from my own pocket. There will be no employer contribution happening for me. Is it possible? So if you are an individual, if you are an individual, whether resident or non-resident, you are contributing to your NPS account, even if you are employee or self-employed, for your own contribution, you are going to get the deduction under section 80 CCD, subsection 1 and subsection 1B. But if your employer contributes, meaning this individual is an employee and his employer contributes, then two effects will be given. How many effects? First, the employer's contribution will be treated as your taxable salary. First, the employer's contribution will be taxable as your salary. Yes or no? And then that same amount will be allowed under section 80 CCD subsection 2. 80 CCD. So for employees, there are two benefits. Own contribution gets allowed under CCD 1 and 1B, and employer contribution gets allowed under section CCD 2. And for self-employed individual, only one benefit is there. What? Own contribution gets allowed under section 80 CCD 1 and 1B. Now tell me, how much amount you can claim for your own contribution? So if you are employee, if you are making contribution to your NPS, can I say your own contribution amount? So during the previous year, whatever amount you are contributing, during the previous year, whatever amount you are contributing to your NPS account, that will be allowed under section 80 CCD 1, subject to 10% of your salary. Subject to, so total contribution made by you during the previous year, or 10% of salary, whichever is will be allowed as a deduction under section 80 CCD 1. Under section 80 CCD, understood? No? But wait, if you are a self-employed individual, then you also can contribute to your NPS account, and your contribution will also be allowed under section 80 CCD 1. So how much amount you can claim? You can claim your entire contribution or 20% of your GTI, whichever is lower. So your contribution will also be allowed under section 80 CCD 1, subject to maximum 20% of your GTI. Subject to maximum. Now let's take one example. Your contribution was 10,000 per month. How much? And in 12 months, total contribution is 10,000 into 12. How much is the total contribution? 1,20,000. That 1,20,000 will be allowed to you subject to 10% of your salary or 20% of your GTI, as the case may be. Depends that whether you are an employee or a self-employed individual. Getting my point? So now for example, you calculated that limit of 10% of salary or limit of 20% of your GTI. That limit was that limit was 60,000 because your salary was 6 lakh, 10% of that 60,000, or your GTI was 3 lakh, 20% of 3 lakh was 60,000. Yes or no? So 60,000 was the limit. How much will be allowed? 60,000 will be allowed under section 80 CCD 1. 80 CCD. Now tell me, how much amount you contributed? Out of that, how much is allowed? What is the balance contribution which is still not allowed? Balance 60,000 is still not allowed. To take the deduction for that, an additional limit of 50,000 is allowed under section 80 CCD 1B. So you can claim your contribution under section 80 CCD 1B up to 50,000 also. Additional 50,000 limit is given under section CCD 1B. CCD. Understood no? So how much was remaining? How much was remaining? 60. That 60 you can claim under CCD 1B subject to maximum. So this way, almost your entire contribution will be allowed, only 10,000 will be wasted. Getting my point? Now, remember one thing, the deduction which you are claiming under 80 CCD 1 will be subjected to overall limit of 80 CCE. What did I say? The deduction which you are claiming under 80 CCD 1 will be further subjected to overall limit of 80 CCE. However, the deduction under CCD 1B will not be subjected to overall limit of 80 CCE. Now what is 80 CCE? I'll tell you. Okay. You have not done these things before? Or you have done this? Done this, but don't remember. Wait. See, ATC. Do you remember ATC? Life insurance premium, PPF, this, that. So total amounts of ATC was 1,85,000. How much? And we know that ATC deduction is maximum how much? Maximum 1,50,000. So 1,85,000 or 1,50,000, whichever is lower. So total deduction under ATC you are getting how much? 1,50,000. Now after ATC, one more section is there, 80CCC. 80CCC says that if you are contributing to notified pension fund, what did I say? Notified pension fund of LIC or any other approved insurance company. You are an individual, you can be resident or a non-resident, but during the previous year you are contributing to notified pension fund of LIC or any other approved insurance company. Then for that contribution you are going to get deduction under section 80CCC, under section subject to a further limit of 1,50,000. So during the previous year you contributed to pension fund of LIC or you contributed to pension fund of any other approved insurance company. Now for example you contributed 1,40,000. How much you contributed? This will be allowed under section 80CCC subject to further limit of 1,50,000. So under 80CCC also there is a limit of 1,50,000. So this 1,40,000 or 1,50,000, whichever is lower. So how much deduction you are going to get under 80CCC? Yes or no? Sorry, 1,40,000. My mistake. 1,40,000. Okay, no? Now tell me, there is one more section, 80CCD subsection 1. And 1B is also there. 1B is also there. Okay? Where you can claim your own contribution to NPS. So are you contributing to your NPS? Yes or no? How much you are contributing? 10,000 per month into 12. 1,20,000. Now let's take, we are contributing 12,000. 12,000 into 12 will be 1,44,000. So can I say 1,44,000 I am contributing to my own NPS account. Now this contribution I am claiming as a deduction under 80CCD1. This I could have also claimed under CCD1B subject to 50,000 limit. So I can do, I can make the calculation in two ways. First I will claim here and whatever balance will remain that I will claim in CCD1B. Hello? Or reverse can also happen. I can, out of this I can claim full 50,000 under 80CCD1B and the balance amount I can claim here also. Yes or no? Which one is more better? Did you understand what I told you? This 144 I am claiming here, this 144 I am claiming here, this amount I can claim from here. For example, the limit was 1,20,000. Limit was 10% of my salary or 20% of gross total income. I calculated that limit was 1,20,000. So how much will be allowed? Tell me. Entire 1,44,000 will be allowed or 1,20,000 will be allowed? 1,20,000 will be allowed. Yes or no? Now how much is remaining? Tell me how much is remaining? 24,000. That I can claim under section 80CCD1B. That I can claim under section 80CCD. How much is 80CCD1B? 24,000. How did I get this 24,000? First I will write 1,44,000. Out of that I have claimed how much? 1,20,000 I have claimed under 80CCD. So how much is remaining? 24,000 I am claiming here subject to an additional limit of 50,000. This or 50, whichever is lower. So I am going to get the deduction of 24,000. Yes or no? Or a reverse also I could have done. Reverse also I could have done. I could have claimed that 1,44,000 here subject to 50,000. I could have claimed entire 50 over here and the remaining 94. Remaining I could have claimed above also. Getting my point? Which is better? This is better or claiming the entire 50 here first is better? Why? Second option is better. This is not better. I'll tell you why. 3 deductions: ATC, ATCCC and CCD1 are subjected to overall limit of ATCCE. There is one section, ATCCE. In that section it is written that the deductions available under these 3 sections, the total amount is how much? Tell me how much total? 4,10,000. Total is 4,10,000, no? Will be subjected to overall limit of 1,50,000 given under ATCCE. Now you are thinking that bloody you are going to get deduction of 4,10,000. All these 3 sections taken together cannot be more than 1,50,000. So how much deduction you are going to get? 1,50,000 this and 24 this. Total amount? 1,74,000 of deduction. Now please remember, this ATCCD 1B is not subjected to overall limit of ATCC. So you'll have to claim it separately. Understanding? Claiming 1,74,000 deduction. Those 3 plus this total is. Now if I take ATCCD 1B first and then balance from CCD 1, then what will be the change? Please pay attention. See, here this entire 1,40,000 I will claim subject to 50,000. Subject to. So how much will be the deduction over here? It will be 50,000. Yes or no? Now out of this 50,000 is claimed here. Out of this 50,000 is claimed here. So how much is remaining? So out of this 144, 50 is already claimed under ATCCD 1B. So 94,000 is remaining. 94 or 1,20,000, whichever is lower. 94,000. Now do the total. 2,90,000 and 94, 3,84,000. 3,84,000 or 1,50,000 is not going to change this. This will remain same. Now 150 plus 50. Total deduction is. Now claiming 2 lakh is better or claiming 1,74,000 is better? 26,000 extra you are getting as a deduction over here. And that is possible only if you exploit this ATCCD 1B fully first and then claiming the balance in ATCCD 1. Will you be able to do it? Yes or no? ATCCD 1 is subjected to overall limit of ATCC, but ATCCD 1B is not subjected to overall limit of ATCC. Will you remember, sir? Hello, sir. So tell me, are you an assessee? Are you an assessee? Individual? You can be resident or non-resident. You can be employee or a self-employed. Whatever contribution you are making to your NPS account, your own contribution will be allowed under section ATCCD 1, subject to 10% of your salary or subject to 20% of your GTI, as the case may be. And that is further subjected to overall limit of ATCC. Yes or no? And that own contribution can be claimed under section ATCCD 1B subject to an additional limit of 50,000, which is not further subjected to overall limit of ATCCE. Will you remember this? Will you remember? Now tell me, ATCCD1, how much is the maximum limit? How much is the maximum limit? ATCCD1. ATCCD1, how much is the maximum limit? 10% of 10% of basic plus DA in terms, or 20% of 20% of GTI, you know na? Hello, all the 5 heads, set of carry forward and clubbing, that amount is GTI. Okay, now pay attention. Now I am going to discuss only about employee. Are you an employee? Your employer can also contribute in your NPS. So what will be the first effect you are going to give? What will be the first effect? Fully taxable under the head. So employer's contribution to your NPS account, if you are an employee. So first effect will be, that amount will be fully taxable under the head. Now that amount which has been taxed under the head salary, for that you can get the deduction under ATCCD2. You can get the deduction under section. How much? That entire amount will be allowed subject to maximum 10% of your salary. So first, your employer contributes, make that amount taxable as your salary, and then bring that amount under section ATCCD2 and claim this amount under ATCCD2, subject to 10% of your salary, subject to 10% of your. But if you are following 115 BAC, if you are following, will you get ATCCD2? Yes, still you are going to get ATCCD2, and in that case the limit will not be 10%, it will be 14% of your salary. 14% of your salary, yes or no? But wait. If you are not following 115 BAC, then 10%, then, and if you are a government employee, then also it is 14%. So if you are a government employee, if you are a deduction under ATCCD2 will be available, whether you are following CCD1, whether you are following 115 BAC or not, but the deduction will be maximum 14% of salary, because you are a government employee, but what if you are a normal employee? What if you are normal employee? Whether you follow 115 BAC or you don't follow 115 BAC, ATCCD2 deduction will be available, but the deduction will be maximum 10%. If you don't follow 115 BAC, and if you follow 115 BAC, then it will be 14% of your salary. Getting my point? Now pay attention here. Employer's contribution. What did I say? Employer's contribution to NPS account. NPS account. This is the amount. This is the maximum dash percent of salary. Now you are going to tell me the percentage, huh? You are a government employee. Wait. Following 115 BAC. Not following 115 BAC. Done? In whatever case, it will be 14% if you are a government employee. What if you are a non-government employee? Not following 115 BAC, 10% of your salary. Yes or no? And following 115 BAC, then you will also get 14% of salary. Will you remember? But first, this amount you are supposed to show taxable under the head salary. First this will be your salary, and from there you are going to take it as a deduction under section ATCCD2. Yes or no? And now pay attention. This was your tax treatment. Your employer will contribute. Your employer will. For him it is expense. So is he contributing to your NPS? Will he get any deduction for that? Under the head PGBP, yes. It is treated as the expense in the hands of the employer, allowed under the head PGBP, under section 36 subsection 1 clause 4A, subject to 14% of your salary. Subject to. So in my deduction notes, here I have written 10%. Whenever you will get this note, you are going to update it to 14%. Yes or no? Yes or no? This is to employer. And any contribution employer is making over and above 14% will be disallowed in the hands of employer. Under the head PGBP, it will not be allowed. 40A9. Entire discussion I have done with PGBP. Will you remember this? Sure. So now based on this, let's solve one question. Let's see whether you are able to solve that question or not. Okay. Illustration number 5. Now slowly and gradually the difficulty level of the question will increase. The basic salary of Mr. A is 1 lakh per month. He is entitled to dearness allowance, which is 40% of basic salary. So how much will be DA? 40,000. 50% of the DA forms part of pay for retirement benefits. That DA which forms part of pay for retirement benefits is in terms. So out of the total DA, half DA is in terms and half DA is not in terms. Both Mr. A and his employer ABC Limited contribute 15% of basic salary to the pension scheme referred under section. So the pension scheme which is referred under section 80 CCD is NPS. Mr. A is also contributing and his employer Mr. ABC Limited is also contributing. How much is the contribution? 15% of? 15% of? Total? No. Contribution is only 15% of. Are they telling you to calculate the limit? When you will calculate the limit, that time you are going to take 10% of salary, and in that salary you are going to take basic and DA in terms. Straight away they are saying that 15% of basic. 15% of? So don't apply your mind here. Calculate 15% of basic. That is what? Actual contribution. That is what? How much should be the contribution? 10% of salary. 10% of. That time the salary will also include basic and DA in. Ayyo. How much? Explain the tax treatment in respect of such contribution in the hands of Mr. A if he has exercised the option of shifting out. And wait. What would be your answer if Mr. A pays tax under the default tax regime? First of all, tell me, how much is his salary? Is he going to get this salary for full year? Is he going to get this salary for full year? Yes, 1 lakh for full year. Yes or no? 1 lakh per month for full year. So what is the total salary? 12 lakhs. 12 lakhs will be the basic salary. 12 lakhs will be the... Okay, good sir. 12 lakh is the basic salary. What is the DA? 40% of this. 40% of this. 4 lakh 80. But half of that is in terms. So can I say 4 lakh 80,000 is DA. Out of that 2 lakh 40,000 is in terms and 2 lakh 40,000 is not in terms. In terms and not in terms. Right? No? Now, how much contribution is made? See this. 15% of? 15% of? What was your basic? Calculate 15%. So 1 lakh 80,000 will be contributed by whom? Mr. A. And 1 lakh 80,000 will be contributed by employer. First of all, Mr. A is contributing. First of all, tell me, your own contribution allowed under CCD 1 as well as 1B. Which one will you claim first? 1B. Full 50,000 you will claim. Out of 180, full 50,000 you will claim in CCD 1B. How much remains? 130 will be allowed under CCD 1. Subject to maximum 10% of your Salary. 10% of your, and in that salary will include basic and DA in terms. What is the total? 14 lakh 40,000. 10% of that. How much is the amount? 1 lakh 30,000 will be allowed subject to 1 lakh 44. Total will be 1 lakh 30. So can I say you can claim 80 CCD 1B amounting to 50,000? Out of 1 lakh 80, you can claim 50,000 here, and 80 CCD 1, you can claim either 1 lakh 30 or 1 lakh 44,000, whichever is. So you can claim 1 lakh 30 and 1 lakh 40, both taken together, your total deduction will be 1 lakh 80. And this will be allowed only if you shift out of 115 BSE. What would be your answer if you pay tax under default tax regime? Will this be allowed? CCD 1B? No. CCD 1? No. So what will be your total deduction? Nil. Getting my point? But if you don't follow 115 BSE, then you can claim both, and total will be 1 lakh 80. Yes or no? And remember, this 1 lakh 30 will be further subjected to overall limit of 80 CCE. So 80C plus 80 triple C plus 80 CCD 1 amounting to 1 lakh 30, all taken together cannot be more than 1 lakh 50. Yes or no? But this 80 CCD 1B will still be fully allowed, because that is not subjected to overall limit of 80 CCE. Will you? What happened to me? Okay, no? Chandru, please check. Okay, did you get this? Did you get this? Now wait. Tell me, if you don't follow 115 BSE, then this is the treatment. What if you follow 115 BSE? Will you get CCD 1B? No. Will you get CCD 1? No. Total deduction will be nil. For your contribution, you are not going to get any deduction. But is your employer also contributing? How much? Same amount. Employer is contributing 1 lakh 80. First effect. Taxable as salary. Entire 1 lakh 80 will be taxable under the head. Now that 1 lakh 80 will be allowed. That 1 lakh 80 will be allowed under section 80 CCD 1, 1B or 2. So now you are going to claim deduction under section 80 CCD 2 amounting to 1 lakh 80. And if you are not following 115 BSE, maximum 10% of your salary. So what was your salary? 12 lakh plus 2 lakh 40, 14 lakh 40,000, 10% of that. So in that case, 1 lakh 44,000, this or this, whichever is lower, 1 lakh 44,000 will be the total amount of deduction under section 80 CCD 2 if you don't follow 115 BSE. But what if you follow 115 BSE? Then this limit of 10% will change to 14%. 14% of your salary, 14% of 14 lakh 40,000 will be 2 lakh 1,000. In that case, 1 lakh 80 will be allowed fully. Yes or no? Yes or no? Now, Mr. A is the employee of, he is not a government employee. Hence, we have done 10% and 14%. If Mr. A was a government employee, we would have always taken 14%. Whether he follows 115 BSE or does not follow 115 BSE. Will you remember this? This is the final solution. Please check. See, 14 lakh 40 is your salary. Okay? Hello? Now, here now, what they have done, see. They have first claimed under section CCD1 and the balance they are claiming under 1B. Yes or no? But see, 1,44,000 is allowable as deduction under CCD1. This would be taken into consideration and be subjected to overall limit of 1,50,000 under CCE. 36,000 allowable as a deduction under CCD1B is outside the overall limit of 1,50,000. Now in the alternative, in the 50,000 can be claimed as deduction under section CCD1B and the balance 1,30,000 can be claimed as a deduction under section. We have given this treatment and always give this treatment. This is the correct treatment which we have given. Yes or no? In this situation only you are going to get maximum amount of deduction. And if you will first claim CCD1 and then the balance in CCD1B, no, the amount of deduction will be less, which I have already proved in my example earlier. Getting my point? Hello sir. So employer's contribution to pension fund would be allowable as deduction under CCD2 subject to maximum 10% of salary. Therefore deduction under 80 CCD2 would also be 1,44,000, even though the entire employer's contribution of 1,80,000 is included in salary. However, this deduction of employer's contribution of 1,44,000 to the pension scheme would be outside the overall limit of 1,50,000. Why to write bloody all these things? Huh? Can you understand that how complicated they have made the things? And if you bloody read all these things, you will go mad. What simple thing they have asked you? What simple thing they have asked you? See the question. Explain the tax treatment in respect of such contribution in the hands of, if he exercises 115 BSE or he does not exercise 115. No need to write down all these commentary. What are you going to do? Simple. You are going to write, if Mr. A opt out of default tax regime. If we opt out of default tax regime, first point, Mr. A's contribution to NPS account. Mr. A's contribution to NPS account, 15% of 12 lakhs. 15% of amounting to 1,80,000. Now, allowed under section 80 CCD 1B, how much? Rupees 50,000. Yes or no? And here you are going to write allowed under section 80 CCD 1. Allowed under section 80 CCD 1. How much? 1,80,000 minus 50,000 is equal to 1,30,000 or 10% of 12 lakhs plus 2.4 lakhs is how much? 1,44,000. Getting it or not? What I am doing? Logic or magic? Magic, no? Very good. 1,30,000, or here it will be 1,40,000. Sorry, 1,44,000, no? 1,44,000. Whichever is lower. So here the deduction will be rupees 1,30,000. Therefore, total deduction, that is 80 CCD 1 plus 1B is equal to 1,80,000. 1 lakh. Now a small note you are supposed to write below this. If Mr. A does not opt out of default tax regime, if he does not opt out of, then deduction under 80 CCD 1 and 1B not available. Hello? Done. So no need to give that commentary which they have given. Yes or no? Tell me. If Mr. A has not opted out of default tax regime, then deductions under section 80CCD 1 and 1B shall not be available. That's it. Did you understand this? Now tell me, this was point number 1. Now I will write point number 2. Employers' contribution to NPS account. How much was that? Same. 15% of your basic. 12 lakhs. That is 1,80,000. Now here what are you going to do? Again two things. Number one, fully taxable under the head income from salary, and then deduction under section 80CCD 2. How much deduction? Entire 1,80,000 or 10% of 14,40,000, which is 1,44,000, whichever is lower. So here the deduction would have been 1,44,000, deduction under section 80CCD subsection 2. And note, deduction under section 80CCD 2, if 115 BSE is followed, then it will be how much? Same, 1,80,000. Or now you are going to write 14%. 14% of what? 14,40,000. How did you get this 14,40,000? You know, na? Basic plus DI in terms. 2,01,600. Whichever is lower. So in that case, the deduction would have been full 1,80,000. Very difficult or easy? You'll get full marks if you'll write like this also. No need to write in that paragraph form and make the things complicated. Understood or not? Now, let's pay attention on the next part. Sixth one. Now the gross total income of Mr. X. Gross total income of Mr. X for the assessment year 25-26 is how much? You have to say thank you 1,000 times to the examiner if he becomes so kind. Did he tell you to calculate the GTI, or he has himself calculated the GTI? Hello? He has himself calculated the GTI. Macha, please take GTI. How much is your GTI? 8 lakh. Okay? The same question they can frame, but they will include details to calculate GTI also. Instead of giving the direct amount of GTI, they will give information in the question. Based on that information, first you calculate your GTI. And then from that GTI, these deductions will be taken. Getting my point? So tell me, are they telling you to calculate GTI or GTI is calculated? He has made the following investments or payments during the year 24-25. He has contributed to PPF. What will be done? Will it be allowed under ATC? Yes. Payment of tuition fees to APJ School, New Delhi for education of his son studying in class 11. See, for 2 children of the assessee, any 2 children of the assessee can make the payment for full-time education in any school, college, university in India. That will also be allowed under ATC. So is the school, college, university in India? Yes, New Delhi. Full-time education, 11th is a full-time education. Yes or no? And for that full-time education of his child, single child, he is paying tuition fees. That tuition fees will be allowed. But if it was a development fees or it was a donation, then it is not allowed. Only the tuition fees. So will it be allowed under section ATC? Yes. This can also be claimed under ATC. Now repayment of housing loan taken from Standard Chartered Bank. Assuming that the housing loan is taken for residential house property, and that residential house property is also assessed under the head house property. So the principal repayment will also be allowed under section ATC. Contribution to approved pension fund of LIC. Approved pension fund of is allowed under section 80CCC. 80. Now compute the eligible deduction under chapter 6A. If Mr. X exercise the option of shifting out. Following or not following? Not following. Simple. Calculate ATC total. Calculate ATC total. 1 lakh? 1 lakh. Will it be allowed fully or subject to maximum 1,50,000? So total deduction under ATC is how much? 1,80,000 or 1,50,000, whichever is lower. 1,50,000. Can you take 80CCC deduction? Yes, 80CCC also is there. 1,05,000 or 1,50,000, whichever is lower. 1,05,000. If you had 80CCD1, we would have taken 80CCD1 also. How much is 80CCD1? Nil, no deduction here. Now all these three taken together is how much? 2,55,000. Do you have any overall limit on these three deduction? 1,50,000. So how much will be the total amount of deduction? 1,50,000. What are they telling you? Compute the eligible deduction under chapter 6A. That is 1,50,000. Check the final answer. 1,50,000. We also got 2,50,000. They have just presented in this way. Will you be able to do it? Very easy, huh? Next one. ATCCH. Now what is ATCCH? I'll tell you. See, Agniveer Corpus Fund is there. It is a scheme framed by central government. So if you want to get into the defense, meaning you want to become a soldier. So earlier what used to happen, you used to become a soldier by writing an exam, a written exam, and give the medical test, pass the medical test, you directly become soldier, permanent employee. No, now it is not done. Now first you will have to go through Agniveer scheme. So for the first 4 years, first you write a written exam, pass that, then medical will happen, medical also you pass, then you will enter in the Agniveer scheme. You will directly not become soldier, permanent employee. First you will become an Agniveer. And for the first 4 years, what happens? You are just a probationary employee, probationary soldier, still not a permanent employee of the government. But still you are the employee of the government. So for the first 4 years, what happens? That the government treats you as a soldier only. If there is a requirement to fight as a soldier, you will be going as a soldier also. Yes or no? Now what happens? After 4 years are completed, no? After 4 years completed, then a selection happens based on your 4 years performance. Out of total Agniveers, approximately 20 to 25% will go on to become permanent soldiers in Army, Navy, Air Force. All the armed forces, this scheme is applicable. So if you want to get into Army, you have to follow this scheme. If you want to go into Air Force, you have to go through this scheme. Yes or no? But only after 4 years training and all, you will enter into the permanent employment of the government as a permanent soldier. So what happens if I am not selected after 4 years? So government takes care of you, that within 4 years you will be given proper training, you will become a complete package, complete gentleman. Graduation will be completed, you will be in discipline, yes or no? And then what do I say? Then after 4 years, whenever you will go out, okay, there will be some jobs, government jobs, semi-government jobs, in which you will be given preferences. So if you cannot become a soldier, after 4 years, you will be a disciplined gentleman coming out of that academy. Graduate, disciplined, and with all the courage, knowledge, and body like a soldier. And then when you will come out, you will be different from the youth who did not come in this scheme and who spoiled their 4 years in college behind the girls. Hello. So definitely this scheme is valuable. And after 4 years when you will go out, no, don't worry, there will be a corpus which we have created for you for 4 years. In this corpus, every month whatever salary you are going to get as Agnivir, from that salary 30% amount will be deducted, and that will be contributed in this corpus. And government will also do a matching contribution in the Agnivir corpus fund. And by the time, and regular basis, interest will also be credited. And by the time after 4 years when you leave, no, approximately 11.5 or 12 lakh rupees will be accumulated in that corpus. You leave with that 12 lakh rupees. Within those 4 years, others would not have earned 12 lakhs. They would have spent approximately 20-25 lakhs of their parents. Not at all disciplined. Getting my point? So it is a benefit for you. And after 4 years when you will go out, you can do anything with this 12 lakh. Start your small business. If you want to study ahead, you can study with this 12 lakhs. Yes or no? There will be some government or semi-government organization where you will be given preference. Prepare for those exams with this 12 lakh rupees. So everywhere outside India also, if you will see developed countries, no, like Canada is there, Germany, US, everywhere this type of scheme is there. We were not having this type of scheme. This scheme came in 2020, if I am not wrong, during the COVID times. And there were many agitations about this scheme at that time. People were on road, they were agitating against this scheme. They were stopping the trains. There were so many people coming out. So whatever it is, this particular scheme has some benefit. Now if you are Agnivir, you are as good as employee of the government. Whatever you are getting from the government will be taxable under the head salary. And wait, the contribution which the employer, means the government, will make in your Agnivir corpus fund every year, even that will be treated as your salary, taxable under the head salaries. Getting my point? And for that you are going to get deduction under 80CCH subsection 2. Employer's contribution will be first taxable as your salary, and for that you will get a deduction under 80CCH 2. How much? Full amount. First show the full amount as taxable salary and then claim full amount as a deduction under 80CCH 2, whether you follow 115 BSc or you don't follow 115 BSc. What about your own contribution from your salary? For that also you are going to get deduction under 80CCH 1. 80CCH 1, and that will be how much? Full amount. Whatever amount you have contributed will be allowed as a deduction. 80CCH 1 done, 80CCH 2 done. Done 80CCH. Will you remember this? Hello? Now pay attention. Next one. Quantum of deduction. That I have already discussed. Now 80D is there. Okay, no? 80D, 4 payments are there. How many payments? See, 4 payments will be there. One is MIP, 2 is CGHS, 3 is PHC, 4 is medical expense of senior citizen, that senior citizen for whom MIP is not. MIP means what? Mission Impossible. Medical insurance premium. CGHS, Central Government Health Scheme. PHC, preventive health checkup. And ME means medical expense of a senior citizen for whom there is no medical insurance premium. So if you are an individual, if you are an, for yourself, your spouse and your dependent children, for yourself, your spouse and dependent children, or for your parents, or for your, keep them separate, huh? Keep them separate. And if you are HUF, if you are HUF, if you are HUF, then for your members, these payments can be made. Now see, if medical insurance premium is paid, then it will qualify. If payment for central government health scheme is made, it will qualify only if it is made for yourself, your spouse and your dependent children. It will not qualify if you will pay it for parents or HUF is making the payment for their member. Yes or no? If preventive health checkup payment is made, it can be made for yourself, your spouse and dependent children and for your parents. But the maximum amount which will qualify will not be more than 5,000. Will not be more than. So for you, your spouse and dependent children, maximum 5,000. For you, for your parents, maximum 5,000. 5,000, 5,000 separately? No, 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 no. For you, your spouse, dependent children and your parents taken together, the total preventive health checkup cannot be more than 5,000. Total 5,000 will qualify. So for yourself, your spouse and dependent children, the preventive health checkup paid was 4,000. Preventive health checkup paid was 4,000. Yes or no? And for your parents, you have paid 3,000. If you qualify both, no, what will happen? Total will be 7,000, which is not allowed. Total should not be more than. So if you qualify your 4,000, then for parents, maximum 1,000. And if you qualify entire 3,000 of your parents, then for yourself and your spouse, maximum 2,000. 3 plus 2, 5. Or you can have it in any combination, 2,500, 2,500. 2,400, 2,600, 2,100, you can have it in any combination, yes or no, within the amount spent in any combination, but the total should not be more than 5,000. Will you remember? But it is not allowed if the payment is made by HUF for its members. And wait, any medical expenditure incurred will be allowed if it is allowed for, if it is paid for senior citizen for whom there is no mediclaim. So for example, you, yourself, your spouse or dependent children, senior citizen, yes. And mediclaim was not given? No. Then your mediclaim, then your medical expense will be allowed. Your parents, senior citizen, yes. For them, mediclaim was not there? No. For them also, if the medical expense is paid, will be allowed. And if you are HUF, your member is a senior citizen, your member is a senior citizen. For that member, if mediclaim is not there, even their medical expense will be allowed. Yes or no? Now, this is the total qualifying amount. What did I say? This is the total qualifying amount. Total qualifying amount will be allowed under section 80D subject to maximum 25,000. Subject to maximum. This is the total qualifying amount separately for parents. For will be allowed separately subject to maximum 25,000. And this is the total qualifying amount for HUF will be allowed in the hands of HUF subject to maximum 25,000. But remember, if in the total qualifying amount, what did I say? If in the total qualifying amount, medical insurance premium paid for senior citizen, medical insurance premium for senior citizen or medical expense of this type of senior citizen is there, then the limit of 25,000 will increase to 50,000. Understanding? So total qualifying amount will be allowed subject to maximum 25,000. But if that total qualifying amount has medical insurance premium of senior citizen or medical expense of senior citizen for whom there is no mediclaim, yes or no, then that total qualifying amount will be allowed under section 80D subject to maximum 50,000. And remember, one more thing. This has to be calculated separately, subject to separate limit of 25,000, and this has to be calculated separately, subject to separate limit of 25,000. Don't mix both of them. Don't mix both of them. For example, for yourself, your spouse and dependent children, the total payments were 32,000. Total payments were, and what was the limit? So 32 or 25, whichever is lower, claim it separately. For your parents, the total payment was 18,000. Total payment was not 18. Let's take total payment was 20,000. Total payment was, what is the limit? 25. So 20 or 25, whichever is lower, 20. So this 20 separately will be allowed. This 25 separately will be allowed. But what are you doing? For yourself, your spouse and dependent children, how much payment you made? 35. How much payment you made? 35. And for your parents, how much payment you made? 20. 35 plus 20? 55. And total limit? 25 plus 20? 25. 50. So 55 or 50, whichever is lower, you are claiming a deduction of 50. That will be wrong. No need to mix. No need to. For yourself, your spouse, your dependent children, 35 or 20, whichever is lower. How much? Sorry, 35 or 25. 35 or 25, whichever is lower. 25. Yes or no? And for your parents, how much was the payment? 20. 20 or 25, whichever is lower. 20. So your total deduction should be 45. This is correct. This is correct. But what are you doing? 35 plus 20, 55. 25 plus 25, 50. So 55 or 50, whichever is lower, 50. Wrong. Why? If you add both of them, no, what will happen? Here, whatever amount which was above 25 was not allowed to you. Getting my point? And here, 5,000 limit of parents also remains. So if you add, no, what will happen? Whatever extra amount which was allowed subject to your 25 could not be allowed, no. You will claim it in the additional limit of parents, or parents amount you will claim in your limit, which is not allowed. Getting my point? So always calculate separately. Always calculate separately. And all these four payments, all these will be allowed under 80D. If, oh sorry, not all four, 1, 2 and 4. 1, 2 and only if made by way of any mode other than cash. If these payments are made in cash, will not qualify. But wait, there is no such restriction for preventive health checkup. Entire preventive health checkup will be allowed. Entire preventive health checkup will be allowed even if it is made in cash. But remember, the total amount of preventive health checkup qualifying for 80D cannot be more than 5,000. So preventive health checkup can be made in cash also. It can be made in kind. Don't worry, madam. See, 80D no. 80D. No need to take the photographs also. Everything is there in my notes. Getting my point? You just have to go through them once. Okay? Should I move ahead? 80D, understood no? Now pay attention. How many payments were there in 80C? If you will go and see 80C, no? In 80C there are total approximately 18 payments are there. 18 payments. Any of those payments you make, 80C deduction will be available. But for 80D, only 4 payments are there. Only 80CCD, only 1 payment. 80CCC, only 1 payment. Getting my point? Everyone? Now let's try to solve one question. Ready? Are you ready? Mr. A, aged 40 years. How much is the age? Senior citizen, no? Or not a senior citizen? Okay. Paid what? Medical insurance premium of 20,000 during the previous year 24-25 to ensure his health as well as the health of his. So for himself and his spouse, How much premium he has paid? Will it be? Will it qualify under 80D? Yes. Provided it is not paid in cash. Yes or no? So, if nothing is mentioned, it is not paid in cash, it will qualify. He also paid medical insurance premium of 47,000 during the year to ensure the health of his father, aged, who is not dependent on him. Ayyo! Shit! Father is not dependent. Father may be dependent, may not be dependent. Mother may be dependent, may not be dependent. Spouse may be dependent, may not be dependent. But children must be dependent. So even if father is dependent or not dependent, his medical and premium you are paying will qualify. Hello? Father is senior citizen or not a senior citizen? If I write age 63 years and non-resident. A non-resident cannot be treated as a senior citizen. So even if your father is 63 years, is he a senior citizen? No. Why? Because he is a non-resident. Tell me, his premium will qualify or will not qualify? Will qualify! But the limit of 50,000 will not be available. Limit of 25,000 because he is not treated as senior citizen. Understanding? Now tell me, is he a senior citizen here? Yes, because it is nowhere said that he is a non-resident, meaning your father will be resident. So resident whose age is more than 60 is a senior citizen. Your father was a senior citizen, his premium you are paying. Now this premium will also qualify, but now the limit will not be 25, it will be 50,000. Getting my point? Now he contributes 3,600 to CGHS during the year. So this is assumed that he has contributed for himself and his family. So this will qualify. He has incurred 3,000 in cash. Ayyo, 3,000 in cash. But wait, it was preventive health checkup. Then it is okay. Preventive health checkup in cash is also okay. Understanding or not? For himself and spouse. And 4,000 by check on preventive health checkup of his father. Ayyo. 3,000 plus 4,000? 3,000 plus 4,000? 4,000 plus 3,000. But both taken together cannot be more than. So if that 3,000, then this will be 2,000. Then if this 4,000, then that will be 1,000. Both taken together cannot be more than. Now compute the deduction allowable under section 80D. Very difficult, very difficult. I'll tell you how much difficult it is. See, DC. DC means Disney Comics. Dependent children. P, parents. Mission Impossible. Central government. Health scheme. Preventive health checkup. Parents means father. Father is equal to senior citizen. Yes or no? What was the Mission Impossible? Tell me. 20,000. It was 20,000. For father it was 47,000. Central government health scheme was 33,600. Here it will be dash. Your and your spouse it was 3,000. And for parents it was 4,000. Wait. If you will qualify entire 4 year, no, then the limit will exceed. So no need to qualify more here. Getting my point? Qualify more in your and your family. But still, if you qualify entire 3 year also, no, then also the limit exceeds. Getting my point? So qualifying full year or full year is not going to give you any benefit. So do one thing now, qualify to the extent of limits only. Getting my point? So if you qualify this for, then how much will qualify? 1,000. How much will qualify? Do the total. Ayyo, I will lose 600. I will lose 400. So what to do? No, not this. What I will do? I will, how much? 2000. Ayyo, I will lose 1000. Getting my point? Qualify in such a way that entire limit gets exhausted. Hello? So do one thing. Do one thing. Total and total. 47 and this will be 23,600. 23. What is the maximum limit? First case. 25,000. 25,000 is the maximum limit. So to reach 25,000, how much should be added? 1,000 and? So can I add 1,400 over here? And if I add 1,400 here, so here it will be 3,600. Here it will be 3,600. Then that entire amount will match. Getting my point? Hello, sir. So here I can qualify 1,400 or I can qualify here 2,600. Sorry, 3,600. Yes or no? So if this will be 50,600, what is the limit? 50,000. How much will be allowed? How much will be allowed? 50,000. Yes or no? And here total how much? 25,000. How much is the limit? 25,000. 25 or 25, whichever is lower. 25. So I am going to get total deduction of? Yes or no? Hello? Somebody would say, sir, I will qualify 2,000 over there. Then also no problem. Total will be 25,000, 25,600 or 25,000, whichever is lower, 25,000, and here it will be 3,000. So 47 plus 3, 50, 50 or 50, whichever is lower, 50. Still you are going to get 75. Qualify in whatever proportion you want. Getting my point? But both taken together cannot be more than. Both taken together cannot be more than 5,000. Got it, sir? And it is not 5,000. We have qualified within 5,000, but we have qualified in such a way that maximum benefit we can claim. Got it, sir? Should I move ahead? Yes or no? Total deduction 75,000, which we also got. Now, illustration 8. Mr. Y, aged 40 years, paid medical insurance premium of 22,000 during the previous year 24-25 to insure his health as well as the health of his and children. Medical insurance premium 22. He also paid medical insurance premium of 33,000 during the year to insure the health of his mother, age, who is not dependent on him. So what? Mother may be dependent, may not be dependent, but dependent child should be there. Yes or no? So is he paying for dependent children? Yes. Then it will be qualifying. Now he incurred medical expenditure of 20,000 on his father, 71 years, who is not covered under Mediclaim policy. So this is the fourth expense. Fourth one. Do you remember? His father also not dependent upon him. So what? Mother is also not dependent. Father is also not dependent. So what? Still the entire amount will qualify. Getting my point? He contributed 6,000 to CGHS. Compute the deduction allowable under ATD if Mr. Y has exercised the option of shifting out. What if he is not shifting out? Entire information is bullshit, the deduction will be nil. They want you to calculate. So they will have to tell you that he is shifting out. Calculate. Simple. Make that same table which I made. Number 1, medical insurance premium, CGHS, preventive health checkup. Then medical expense of senior citizen for whom there is no medical insurance premium. Yes or no? This is self, spouse, dependent, children, and this is P for parents. Okay, no? Now tell me, how much is the medical insurance premium? What is for mother? For mother it is 33,000. Any CGHS? Central government health scheme. How much? 6,000. Okay. For parents, even if it was paid, will not be allowed. Because it is allowed only for self, spouse and dependent children. Preventive health checkup, how much? Any preventive health checkup you can see in the question? No preventive health checkup. Can you see medical expense? For whom? For your father. How much? How much? Can you total? Can you total? It will be 28,000 and it will be 53,000. So this 53,000 will be allowed subject to maximum, because mediclaim is also there for a senior citizen and medical expense is also there for a senior citizen. Getting my point? So this will be 50 and here it will be 28 or 25, whichever is lower. 25. So the total deduction will be 75. Very difficult question, sir. Yes or no? Understanding what is happening in your life. Huh? Illustration number 9. Mr. X is a resident individual, deposits a sum of 50,000 with Life Insurance Corporation every year for the maintenance of his disabled grandfather. Disabled? See, there is one section 80DD. There is one section which says that if you are a resident, individual or HUF, and if you have incurred any expenditure on your HDR. HDR means handicap dependent relative. HDR means handicap dependent relative. Then that expenditure, for that expenditure we are going to give the deduction under section 80DD. But for that you should be a resident. Assessee must be a. So are you a resident? Yes. Incurring any expenditure on your handicap dependent relative? Yes. But see, handicap means physical or mental disability specified in rule 11D. Specified in rule 11D. And that person who is suffering from this disability must be your relative and must be dependent on you. Relative means SSPC. What did I say? SSPC. S for spouse. Again S, siblings, meaning brother or sister. P means parents and C means children. SSPC. SSPC. S for spouse. Again S, P, C. They are your relative, but they are suffering from any of the specified disabilities under rule 11D and they are dependent on you. On such type of relatives who are treated as HDR, handicap dependent relative, if you have incurred expenditure, for their treatment, or you are depositing in special schemes also, yes or no, then you are eligible to get deduction under 80DD. How much? Either flat 75,000 or flat 1,25,000 depending on the disability percentage of your HDR. So if your HDR is disabled 40% or more, but less than 80%, he is ordinary disabled. You will get flat 75,000 deduction. Yes or no? And if your disabled HDR is disabled for 80% or more, 80 or more, then he is severely disabled, you are going to get 1,25,000. No need to give the deduction for the amount spent. Amount spent is necessary to claim the deduction. But how much you are going to spend is not allowed under section 80DD. The deduction depends on disability percentage. So disability percentage 40 or more, but less than 80. Ordinarily disabled 75,000. Disability percentage 80 or more, then severely disabled, flat 1,25,000. Will you remember? So now Mr. X is a, so assessee is a resident? Yes. 80DD will not be allowed if the assessee is not a resident. Are you a resident? Yes. Now assessee deposits a sum of 50,000 with Life Insurance Corporation every year for the maintenance of his disabled grandfather. See, he is depositing in special schemes. This is allowed under 80DD. You can get the deduction under 80DD if you deposit in special schemes. Yes or no? For the benefit of your HDR. But it should be for the benefit of your HDR. SSPC. Grandfather is not a specified relative. Getting my point? Grandfather who is wholly dependent on him and also disabled. Grandfather is dependent. Yes. Grandfather is disabled? Yes, but grandfather is not a specified relative. So can you call grandfather HDR or not a HDR? So if grandfather is not HDR, are you going to get any deduction under 80DD? The answer is no. The answer is no. The disability is one which comes under the persons with disability, blah blah blah, full time pass. Compute the amount of deduction available under 80DD. If Mr. X has exercised the option of shifting out, yes or no? What will be the amount of deduction? Come on, tell me. Nil. Why nil? Even if the grandfather is disabled, even if he is dependent, but he is not a specified relative, he is not SSPC, yes or no? And even if the amount is deposited for such type of dependent disabled, still I am not eligible to get 80DD. Now, what will be your deduction if Mr. X has made this deposit for his dependent father? Can I say dependent disabled father will be HDR? Will be, now tell me, will he get any deduction? Yes or no? Now how much disability his father is having? How much disability? Wholly dependent disability is one which comes under the Person with Disabilities Equal Opportunity Act. A copy of the certificate of the medical authority is submitted. Disability percentage is not given. So either the amount can be 75,000 or the amount can be 1,25,000 depending on the disability percentage of the father, which is not given in the question. Tell me the disability percentage. I will tell you exactly how much. Getting my point? Hello sir. Done sir. Now 80 DDB is also there. 80 DDB talks about the expenditure which you incur for treatment of specified diseases. Treatment of, if you are a resident individual, resident HUF, and you have incurred expenditure for treatment of specified disease for yourself, your SSPC who are dependent on you, then whatever expenditure you have incurred will be allowed under 80 DDB subject to maximum 40,000. And if that patient for whom the treatment is done, if that patient happens to be a senior citizen, then the limit will not be 40,000, the limit will be 1 lakh. And whatever amount for that treatment is reimbursed by the employer or insurance company, to that extent the deduction will not be allowed. So reduce that amount before claiming the deduction. So what you will take? You will take the amount actually spent. You will take the amount actually spent on the treatment. Yes or no? Or maximum 40,000 or maximum. And if the patient was senior citizen, then maximum 1 lakh. Whichever is lower, whichever is, that lower amount will be allowed as a deduction. Lower amount will be allowed as a, but out of that amount, that much amount will not be allowed which has been reimbursed by the employer or reimbursed by the medical insurance company. To that extent your deduction will be ignored. Getting my point? That is 80 DDB. Now 80E talks about interest on higher education loan. Interest on full amount of that interest is allowed subject to certain condition. Very easy section. Okay, so whatever interest on higher education loan is paid by you in this year will be fully allowed as a deduction. That is given in 80E. Now 80EE talks about, 80EE talks about what? 80EE talks about deduction for interest on housing loan. Interest on housing loan. And one more section is there, 80EEA. 80EEA, which talks about deduction for interest on housing loan only. Now see, 80EEB is also there. That also talks about interest. Four sections. Number 1, 80E. Number 2, 80EE. Number 3, 80EEA. And number 4, 80EEB. Everywhere interest. Interest on higher education loan, interest on housing loan, interest on housing loan, and interest on EV loan, electric vehicle loan. Last one is 80EEB. Last one is 80EEB. Interest on electric vehicle loan. Yes or no? Now everywhere you are going to get the deduction. Now I will discuss one by one. First of all, let's discuss 80E. 80E. Are you an individual? Yes or no? You might have taken a loan. Loan for higher education. Higher education for yourself, for your spouse, for your or your children may or may not be dependent on you. Yes or no? Or for any student for whom you are a legal guardian. So for the higher education of these persons, you have taken a loan. And that loan must be taken. That loan must be taken from any bank or any approved charitable institution. Any bank or any. On that higher education loan, whatever interest you will start paying from that year, that interest will be allowed as a deduction for 8 years. For starting from the year of repayment. From that year for 8 years, whatever interest you will pay, that will be allowed as a deduction. Yes or no? But wait, that interest will be paid after 8 years then? Then after 8 years, whatever interest will be paid will not be allowed. The total payment of interest, starting from the year of repayment. What did I say? Starting from the year of repayment for 8 years, the interest will be allowed as a deduction. If the repayment goes after 8 years, then you are not going to get deduction after 8 years. But what if the repayment completes within 8 years? Then till the year of repayment, final repayment, you are going to get the deduction. Whatever interest is paid on this loan, full amount of that interest will be allowed as a deduction. Understanding? So now tell me, for whose education the loan was taken? B, B's son and daughter B. Who is the assessee? B can take the higher education loan for himself. Yes. B can take the higher education loan for any of his children. Yes. Yes or no? So this is eligible higher education loan? No. Because you have to see that the loan is taken for these persons higher education. Higher education is any course which is undertaken after passing standard 12th. MBA is before 12th, no? Or after 12th? So MBA is a higher education. What about BSc and BA? It is also after 12th. Any course of study after 12th is a higher education. So this is also higher education, this is also higher education, this is also higher education. What is the amount of loan? No need to focus on the amount of loan. What is the loan repayment? No need to focus on the loan repayment also. You are supposed to see the interest. That entire interest will be allowed as a deduction under 80. Total 48,000 will be the deduction. Can you see? Yes or no? Now 80 double E is the total, is the interest on. Now see, the housing loan must be taken. The housing loan must be taken from any financial institution. Wait, I'm showing you here. 80 DDB done. Yes. So the housing loan must be taken from any bank or any housing finance company. Remember, you have to take housing loan from only these persons. And that housing loan is taken for residential acquisition of. Construction loan, not allowed. Reconstruction loan, not allowed. Repairs loan, not allowed. Only loan for acquisition of any house property? No, only residential house property was taken by the assessee. Now will the assessee pay interest on that loan? That interest, out of that interest, some interest will be allowed under house property up to 2 lakhs. Up to, and the balance interest which could not be claimed there, no, will come here under 80 EE. That extra interest will be allowed under 80 EE subject to maximum limit of 50,000. But for that, 4 conditions must be fulfilled. Number 1, the housing loan must be sanctioned during previous year. You have to check the date of sanction. You have to check the date of. So the loan must be sanctioned in 16-17. The amount of loan should not be more than 35 lakhs. By taking this loan, the property is purchased. The value of that property should not be more than purchase value. Purchase value should not be more than. And as on the date of sanction, assessee should not own any residential house. if all the four conditions are fulfilled, then on this loan, whatever interest is paid in this year and not allowed under house property head, that entire interest will be claimed under section 80EE subject to maximum 50,000. And this interest you are going to claim as a deduction for how many years? This interest you are going to claim as a deduction for how many years? Every year, whatever extra interest will come, starting from the date on which you have taken the loan, yes or no? Starting from the year in which you have taken the loan, 16, 17, every year whatever extra interest will come, will be allowed under 80EE, subject to maximum 50,000. Now tell me, this is your previous year 24-25. In this year also, on this housing loan, you can give the interest. This year the total interest was 2,18,000. Don't you think 2 lakh is already allowed under? 2 lakh is already allowed under. And balance will be claimed here, subject to maximum. Now next year, same loan is outstanding. Next year also you are going to pay interest. 2,03,500. Because principal will reduce, interest will also reduce next year. 2,03,000. How much will be allowed under house property next year? And how much extra will be allowed here, subject to maximum? And then in the third year, next year, total interest was 1,96,000. 1,96,000 will be fully allowed under. And is there any extra interest? Will not come here. From that year onwards, you will stop getting this deduction. Yes or no? Now see, what is this? And what is this? What is this? Paste. Same. But the section number will change. 80EE. Interest on housing loan taken during previous year 1922. How many previous year? 1920, 2021 and 21-22. During these 3 years you have taken the loan. Loan for residential house property. Loan for acquisition of. And that loan you have taken from any bank or housing finance company. And on that loan, whatever interest you are giving, which could not be claimed under the head house property, that extra interest will be claimed under 80EE. That extra interest will be claimed under 80EE, subject to maximum 1,50,000. If all these four conditions are satisfied. Number one, housing loan must be taken between 1922 21-22. During these 3 years, the loan must be taken. What should be the amount of loan? Any amount. There is no restriction on the amount of loan. What should be the value of the property? It can be any value of the property. But remember, the stamp duty value of the property should not be more than 45 lakhs. Yes or no? And as on the date on which the loan is taken, loan is sanctioned, as on that day, the assessee is not owning any residential house property. Getting my point? And he was not eligible for deduction under 80EE also. If all these conditions are fulfilled, then under section 80EE, extra interest which could not be claimed under the head house property can be claimed here, subject to maximum. Subject to maximum. Done. 80EE. Now, next is EV loan. Now, to purchase an electric vehicle, the assessee is taking a loan from any specified NBFC. So you have to take the loan from any bank or any specified NBFC. And that loan is taken for purchase of? Did they tell you electric car only? Or electric scooter only? Or electric vehicle? It can be any electric vehicle. Yes or no? Now to take that electric vehicle, you took a loan, and on that loan, whatever interest you will pay will be allowed under 80EEB, subject to maximum 1,50,000, provided this interest was not allowed in any other section. For example, this electric vehicle you have purchased for your business, then this loan will become your business loan. Hello? And on that loan, the interest you will claim under the head PGBP. Will you be able to claim that interest here? No, because that interest is already allowed under any other provision. Now, can I say for your personal electric vehicle, for your Personal electric vehicle, you can take this loan? Yes. And on that, whatever interest you have given, that interest was not allowed under any of the provision. That interest you can claim here. Subject to maximum? Subject to maximum. But for that, the loan must be taken in 1920 or 2021 or 21-22 or 22-23. 4 years are given. During these 4 years, the loan can be taken. Loan was sanctioned at any time during these 4 years. Yes or no? On this loan, whatever interest is there, full amount of interest we are going to allow you till the time the repayment is not done. Till the time the loan will not be actually repaid. Every year, whatever interest will come, will allow under 80 EEB. Subject to maximum 1,50,000. Yes or no? Yes or no? This was your 80 EEB done. Now after 80 EEB, 80 G is there that we are going to do later on. But first of all, did you understand this 80 EE? 80 EE and all? Mr. A purchased a for at a cost of, wait. Cost means value of the house property. Is it more than 50 lakhs? If you remember 80 EE, value of the property should not be more than 50 lakhs. It is not more than 50 lakhs. When did he purchase? House property was purchased in 2000, in respect of which he took a housing loan amount is not more than 35 lakhs. And what is the rate of interest? On the same date. The loan was sanctioned. Can I say the date of sanction of loan is in previous year 16-17? Yes or no? Complete the eligible deduction in respect of interest on housing loan for 25-26 if Mr. A has exercised the option of shifting out, assuming that the entire loan was outstanding as on 31st March 25 and he does not own any other house property. Can you calculate? So what will be 11% of 35 lakhs? 3,85,000. Out of that 3,85,000, don't you think 2 lakh will be allowed under house property head? Because this house property is used as your SOP. So this is housing loan taken for SOP. So on this housing loan, 3,85,000 you will claim under PGBP. Sorry, under house property. So under house property only 2 lakh will be allowed. What about the balance 1,85,000? Bring under 80 EE and it will be allowed subject to maximum 50,000. Getting my point? So that balance 1,85,000 will be allowed under 80 EE. Why? Because conditions of 80 EE are fulfilled. Loan was sanctioned in 16-17. Value of the property was not more than 50 lakhs. And the loan amount was not more than 35 lakhs. And the loan was taken from any bank or housing finance company. Yes or no? If all these conditions are fulfilled, then on that loan, whatever excess interest is there can be claimed under 80 EE subject to maximum limit of 50. So 50 will be allowed under 80 EE and 2 lakh will be allowed under house property. Total deduction for interest for this year will be 2,50,000. 2 marks MCQ. Will you remember this? Hello sir. Now pay attention. Next one. You want break? Or should I break you? This question. The following are the particulars relating to Mr. A, Mr. B, Mr. C and D. Salaried individual. How much is the amount of loan? 43, 45, 20, 15. Okay. Loan taken from housing finance company, deposit taking NBFC and a public sector bank. Date of sanction of loan given 1st April 21, 1st April 20, 1st April 20 and 30th March 2019. Date of disbursement. Bullshit. I don't have to see the date of disbursement. Means when the bank has given you loan in your hands. Is not relevant. When the bank has, always check the sanction date. Okay. Purpose of loan. For what purpose the loan was taken? Acquisition of, for self-occupation. Wow. This is also for acquisition of residential house property. This was for purchase for electric vehicle and this was for purchase of electric vehicle for Personal use. Now pay attention. First loan, first loan. First loan was taken from a housing finance company. Allowed or not allowed? Loan can be taken from any bank or a housing finance company. Loan from housing finance company is allowed or not allowed? Allowed. Loan to purchase a house is not allowed from deposit taking NBFC. Either it can be taken from any bank or any housing finance company. Have you taken the loan from housing finance company? No. Have you taken the loan from any bank? No. So this loan taken for acquisition of residential house property, on this loan whatever interest will be there, Mr. B is not going to get that interest under 80EE or 80EEA. Hello? Check Mr. B. Check Mr. B. How much will be the total interest? How much will be the total interest on this loan? 45 lakhs into 9%. Calculate. 4 lakh 5,000. That 4 lakh 5,000 will be allowed as a deduction under house property head. But to claim that extra interest under 80EEA or 80EE, the loan should have been taken from any bank or housing finance company. Yes or no? Deduction under chapter 6A from GTI 80EEA not permissible since loan is taken from NBFC. Point number 1. The stamp duty value also exceeds 45 lakhs. If you will see, what is the stamp duty value? See, even if the loan was taken in 1920, 2021 or 21-22, yes or no? In these 3 years the loan was taken, sanctioned on 1st April 20. Whatever may be the amount of loan, whatever may be the amount of, but the stamp duty value should not be more than, and the loan should not have been taken from. If these conditions are not fulfilled, 80EEA extra interest cannot be claimed. So how much will be the total interest allowable? 4 lakh 5,000 or only 2 lakhs? Only 2 lakhs. Whatever extra was there cannot be claimed under 80EEA. Now let's talk about Mr. A. How much is the loan? 40. Loan is also taken from Housing Finance Corporation. Loan is taken on or after 1st April 2019 and on or before 31st March 2022. Yes or no? 1920, 2021 and 21-22. So the loan is taken within time. Yes or no? For the purpose of acquisition. And how much is the stamp duty value? All the conditions of 80EA are satisfied. Now what is the interest? 9% of 43 lakhs. 3 lakh 87. Out of that 2 lakh will be allowed under house property. How much excess? 187 subject to 1 lakh 50. Subject to 1 lakh will be allowed under 80EEA. 2 lakh and 1 lakh 50. Total 3 lakh 50 deduction to Mr. A. Mr. A. For Mr. B, why the interest was not allowed under 80EEA? Did you understand? Now come to Mr. C. How much is the loan? How much is the interest? So total interest 2 lakhs. That interest of 2 lakh is for loan which you have taken for purchase of electric vehicle. Wait. Electric vehicle. When the loan should be taken? 1920, 2021, 21-22 and 22-23. Taken during 1920-21. Yes or no? And the loan can be taken from any bank or any specified NBFC. Possible? Now on that loan, whatever interest is there, how much? 2 lakhs. How much? Will you calculate 22 lakh into 10%? No. You have to calculate 20 lakh into 10%. And what should be the value of the electric vehicle? It can be any value. No need to see the value of electric vehicle. Yes or no? Entire 2 lakh subject to maximum 1 lakh 50 will be allowed under 80EEB. Yes or no? Last one. The loan amount is 15 lakhs. Loan taken from public sector bank. Bank is allowed for the purpose of purchase of electric vehicle. Electric loan. And when the loan was sanctioned? shit. 2 days early you took the loan. You should have sanctioned, the bank should have sanctioned the loan on 1st April 19 or after that, till 31st March 2023. But the loan was sanctioned prior to that period. So even if it is EV loan, interest will not be allowed under 80EEB. We are sorry. Very sorry, Mr. D. Mr. D, very sorry. Did you understand? Single adjustment will come. Whatever is there for Mr. A will be coming as a single adjustment in the question. Okay, no? These type of questions will come in the exam. No. Now pay attention. What we are going to do now? Now I will tell you 80G. Ready? Ready? Very easy and very interesting also. Very easy and very interesting also. Okay? Pay attention. Gandhi family, yes. One section about the Gandhi family. But that section no more exists. That portion, Gandhi family has been eliminated. See, color, black color. Entire Gandhi family has gone. Now only Prime Minister remains. I will tell you. Don't worry. See, are you an assessee? Deduction under section 80C, 80CCC, 80CCD, then 80CCH, 80D, 80D, and then 80E, and then 80EE, then 80EEA, and 80EEB. Yes or no? All these deductions were available either to individual or HUF, whether the assessee is a resident or non-resident. Please be very careful in this thing. But do you remember 80DD was there? 80DD or 80DDB? 80DDB. Now 80DD is for dependent disabled. Dependent on whom you are incurring expenditure. On whom you are incurring expenditure. But for that dependent disabled also, for himself also, there is a deduction under 80U. 80U means assessee you. Assessee you. You are disabled. Then you get 80U. How much? 75,000 or 1,25,000 as the case may be. But on that particular person, somebody else is earning expenditure, then that somebody else will get the deduction under 80DD. These sections which you have seen, no? These sections, the deduction under these sections will be allowed only if you are individual or HUF. Yes or no? Assessee is either individual or HUF, but the assessee must be, only then these deductions are allowed. Now 3 places we see that the deduction will be available only if the assessee is resident. And in nowhere else there is a requirement that the assessee should be a resident only. Even if the assessee is non-resident, he is going to get those deductions. In all the sections which we have seen, no, the assessee should be either individual or HUF. Either individual or HUF. Now this is the first section. 80G is the first section which says that assessee can be any person. Assessee can be. And then assessee is making a donation. Donation to notified institutions. Notified. Now any donation made by the assessee, who can be any person, whether resident or, he can be resident also, he can be non-resident also, and he can be any person. He has to make the donation or contribution to notified institution. For that donation or contribution, he is going to get deduction under 80G. But wait, remember the donations must be made, must be monetary donations. Must be any donation made in kind. Any donation made in kind, that is other than monetary donation, will not be eligible as deduction under 80G. So only the donations which are monetary donations will be allowed as a deduction. Give money, no. Don't give anything. We don't want you to give umbrellas. We don't want you to give books. We don't want you to give clothes. We want you to give money. Give the money. And that money also you are supposed to give to notified institution. But if the money, if the monetary donation made by you is up to rupees 2000, up to rupees, you can make that donation by any mode, including cash. But the amount donated by you is more than 2000, more than, then the donation has to be made compulsorily. The entire amount has to be donated by way of mode other than cash. Otherwise, that entire amount will be ignored. It will not be allowed as a deduction under ATG. So, for example, you are making a donation of 5000 rupees. You are making a donation of in cash. Will it qualify or it will not qualify? It will not qualify. You are making a donation of 1500 rupees in cash. Will it qualify? You are making a donation of 1,50,000. You are making a donation of 1,50,000 in check. Qualify. That 1,50,000 you have contributed in cash will not qualify. Any amount of donation up to 2000 can be by any mode, including cash, it will qualify. But if the amount of donation is more than, then if you want that amount to be claimed under section ATG, it has to be made by any mode other than cash. Only then it will qualify. Will you remember? Now simple. You have to make the donation to notified institutions. Now if the institution is category A or category B, then the amount donated will fully qualify, and out of that amount 100% will be allowed as a deduction or 50% will be allowed as a deduction, depends that whether it is from category A or category B. Amount donated for category C and D in total cannot qualify more than 10% of adjusted total income, and that amount which qualifies out of that category C will be allowed 100% and category D will be allowed 50%. Now what is this bloody, you did not understand only anything. Did you understand? Now if I'll write with numbers, no, it will immediately be understood by you. See, the notified institutions, I have classified these institutions in 4 categories. How many categories? Category A institutions are also there. Category B institution is also there. And there are institutions in category C also and category D also. Now what they are saying, that the actual amount, what did I say? Actual amount of donation made to any of these institutions. Okay, for example, I am donating 20,000 to category A, I am donating 30,000 to category B, I am donating 40,000 to category C, and I am donating example 20,000 to category D. Yes or no? This is the actual amount which you have donated during the previous year. Now they are saying that out of the actual amount donated, how much will qualify? How much will qualifying amount? What did I say? Qualifying amount. How much will qualify? They say full amount of category A and B will qualify. Full amount of category A and B will qualify. Meaning that 20 plus 30. 20 plus 30. Is there any qualifying limit for these 2 categories? Is there any qualifying limit? This is the total. This is the total. Is there any qualifying limit? No, not applicable. Because entire donation from category A and B will qualify. Entire donation from category A and B will qualify. Meaning this 20 will also qualify. This 30 will also qualify. Meaning they will come under ATG. They will come under ATG. But once they will come under ATG, out of this how much will be allowed under ATG? If it is category A, then out of this 100% will be allowed. And if it is category B, out of this, 50% will be allowed. Yes or no? As a deduction under section 80G. Yes or no? So 20, 100% of 20 will be 20. 50% of 30 will be, so total will be, so 35,000 will be allowed as a deduction. Did you understand this? Everyone? Now tell me, category C and D, no? How much is the total? But there is a qualifying limit on this. There is a qualifying limit. What is the qualifying limit? The qualifying limit is 10% of adjusted total income. Adjusted. So first you will have to calculate adjusted total income. You will calculate your GTI. You will calculate your, from that GTI you are going to reduce LTCG 112, STCG 111A. See, calculation of adjusted total income. Adjusted total income. So first you are going to calculate what? GTI. From that reduce LTCG 112, 112A. Reduce STCG 111A and reduce all the deductions, all other deductions under chapter 6A except ATG. Bloody, this is you are calculating. ATG you are calculating. You cannot have the ATG amount, but do you have the deduction for others? Yes. So calculate your total income only without taking the deduction of ATG. But from that total income, remove these two items. LTCG 112, 112A and STCG 111. Now whatever amount will come, this will be your adjusted. For example, we calculated adjusted total income and the amount of adjusted total income was 8 lakhs. How much? So 10% of 8 lakhs will be? So how much is the qualifying limit? C and D both taken together can be qualifying maximum. How much you have contributed? Full amount will qualify. Full 60 will qualify. Meaning 40,000 of C will also qualify. 20,000 of D will also qualify. Yes or no? And C category 100%, D category 50% will be allowed under 80G. Will you remember? Hello sir. But wait. This is not interesting. Adjusted total income was 5 lakhs. Adjusted total income was 5 lakhs. 10% of that? Excellent. So both taken together, cannot qualify more than. So in the qualifying amount, how much I can qualify? Maximum. So now tell me, C category if fully qualifies, D will not qualify fully. Only 10,000. Balancing figure. Hello. And if D category qualifies fully, then C will not qualify fully because total I have to make 50. Getting my point? Which is better? Qualifying C entirely is better or qualifying D entirely is better? Why? Because 100% deduction for C. So can I qualify this entire 40? Yes or no? Because 100% out of that will be allowed as a deduction. That is 40,000. Now I cannot qualify this 20 fully because there is an overall limit of 50 under which C and D both should come. Yes or no? Under 50, C and D both should come. C I have qualified 40. So how much I can qualify out of D? Only 10,000. Take 50% of that. How much? Total. See, if you would have qualified 20, no? So 50% of 20 would have been 10. And the above amount would have been 30. 30 into 100%, 30. 30 and 10, 40. You would have got 5,000 rupees less. Did you understand this calculation? Now you just have to identify from the question. Name of the institution will be given. Name of the institution. And that institution is category A, or category B or category C or category D. If you correctly identify the category, then put that amount like this, make the calculation like this, you will get the answer. 35,000 plus 45,000. Therefore, deduction under ATG will be 80,000. How much? How come? A and B both taken together 35 and C and D both taken together will be 45. Did you understand? Now, please remember the names of these categories. Did you see this for the first time? ATG, many of the students would be doing this chapter for the first time. This is category A. This is category B, category C and category D. We will make a story to remember these names. Very good. Easy, simple. But there is one more section, it is GGA, which will put you in trouble. Getting my point? So give me some time, I will clarify that also. Understanding? Hello, hello. So first of all, there was one prime minister long back. Long back in India, drought came. What came? Drought means, you know, na? No water, no rainfall, rivers are drying, and animals are dying, no food, no crop, nothing, flood, flood, rivers, drought, famine, yes or no? Now drought is there in India. Long back there was a drought in India. At that time the prime minister, who was the prime minister? Whoever, I don't know. Whoever was the prime minister at that time, he came to me. Sir, there is a drought in India. Please help to eliminate the drought from India. I said, okay, I will help. So I went to a Zilla. Zilla means district. I went to which Zilla? Africa. Which Zilla? There I saw one university, educational institution, where I took the admission and took the training of Army, Navy and Air Force. By taking that training, I developed a technology. I applied that technology. Because of that, Ganga became clean, Bharat became Swachh. Rivers started flowing. Drought got over. Hello. Long back, there was a drought. That time the prime minister came to me. Sir, please help to eliminate the drought. I said, okay, I will help. So where did I go? I go to a Zilla. Which Zilla? Africa. There I saw a university where I took the training of Army, Navy, Air Force, because of which I developed a technology and I applied that technology, due to which Ganga became clean, Bharat became Swachh. Rivers started flowing everywhere, water. Drought got over. Prime Minister became happy. Chief Ministers became happy. Then even the state governments become happy. Entire nation becomes happy. Everyone happy? Hello? Everyone happy? So I have fulfilled my responsibility. Now I will find a girl and I will get married and we will do family planning. Babies, hello? Family planning means babies are there. My children are there. And now children will grow. They will play and go to Olympics. So after my children have gone to Olympics, okay, I have fulfilled all my responsibilities in my life. So what will I do? I will do charity. I will do charity. I will do something for the minority interest. I will go to temple, church, Gurudwara. I will visit historic, artistic places and again come back to my house and I will sleep. Done. All the four categories are done. See, the way in which he has told, no, in that way also we can remember. But this story which I have told, no, in this story I have exploited each and every important word which you should remember. If Prime Minister's Drought Relief Fund, that is the only fund which is there in category B, remember that. Other than that, every Prime Minister is there in category A. You can see here, see. All the Prime Ministers are in category A. But only one Prime Minister is there in category B. Remember category B, Prime Minister Drought Relief Fund. Every Prime Minister category A. Now category C, if you remember, no, remember the word family planning. Remember the word family planning, and also remember Indian Olympic Association and Sports and Games. Sports and, yes or no? Now there are certain bodies in India which promotes sports and games, which promotes the infrastructure for sports and games, and also Indian Olympic Association. If you are making the donation for family planning, if you are making the donation for to Indian Olympic Association or such sports bodies, yes or no, then that donation will qualify for category C. So in category C, remember only two things: family planning. What will you remember? Family planning, and second, Indian Olympic Association or other sports bodies, yes or no? But remember, for this Indian Olympic Association or other sports bodies, whatever donation is made, for that donation, the deduction is available only to company assessees, corporate assessees. This donation is not available to normal assessees, yes or no? So in category C, especially for individuals, we have to remember only one point: family planning. Yes or no? Now, if you will go to category D, no, you have to remember only 3 to 4 words. Charitable purpose, can you remember charitable? Charity, can you remember? So if you donate for charity, donate for charitable purpose, that is category D. That is category D. Or if you donate to any authority, any which is established in India for housing development or planning, developing or improving cities, towns, or town planning authority. Hello? Town planning authority or any housing development authority. Any authority for infrastructural development. So any authority which is in India, which is constituted in India for housing development, or any authority which is constituted in India for development of cities, towns or villages, infrastructural development of cities, towns and villages. I will call them housing development authorities and infrastructural development authorities. Yes or no? Housing development authorities and infrastructural development authorities. If you see any of them, if you donate to them, it is category D. Then there are certain corporations for promoting minority interest in India. For promoting minority interest in India. Then there are public places of worship and public tourist places. Public places of worship and public. You might have heard about Vadapalani temple. Vadapalani temple, yes or no? That temple is any private temple or it is a public place of worship? Sabrimala, private temple or it is a public place of worship? Balaji, Tirupati Balaji, public place. There are big churches also. If you will go to Goa, St. Mary's Church. If you will go to Mumbai, Siddhivinayak temple, yes or no? There is Haji Ali Dargah. Then there is Golden Temple. All these are public places of worship. So for their repair, maintenance and keeping those places clean and all, yes or no? The trust is formed. That trust takes care of these places, or the authorities takes care of these places, yes or no? So to these places also, for repairs, maintenance, etc. of these places also you can donate. And there are some places of artistic, historic or archaeological importance, meaning tourist places like Taj Mahal, Lal Killa, Qutub Minar, yes or no? Many places are there in India. Now many people will go, public will go, what they will do? They will draw a heart. Arrow is drawn. Lakshman loves Rama. There something else is written. Taj Mahal is decorated with all such paintings. Lal Killa, these things. Public will go there, these things are supposed to happen. Public will break something, public will, make it dirty. So to keep the things clean, to restore them, to keep them in their original shape, etc., there are money has to be spent. So the government gives the money, but sometimes you also as a part of public, you can also donate. That donation is category D. So category D, charitable purpose, housing development or infrastructural development authorities, corporations for promotion of minority interest, and number 4, public places of worship and public tourist places. Yes or no? If any of these donations are made, these are category D. Family Planning and Indian Olympic Association, category C. And Prime Minister's Drought Relief Fund, category B. Now remember the words, Zilla, Africa. Any university or educational institution. Wait. Any university or educational institution? No. Any university or educational of national eminence, meaning importance in India, well known in India. IIT Madras, you know, na? It is of national eminence. You know IIMs? National eminence. Annamalai University, national eminence. Well known, reputed, having some goodwill. Yes or no? So those universities. But those universities should be in India. For the welfare of Army, Navy and Air Force staff and their families, some funds are created. So in those funds also you can, donate. There is a fund created by the central government for technology development and application. There is a fund called Clean Ganga and Swachh Bharat. Remember Zilla. Remember Africa. Remember university or educational institution. Remember Army, Navy, Air Force. Remember technology. Remember Clean Ganga. Remember Swachh Bharat. All the prime ministers here, all the chief ministers here, all the state government here, all the national funds are here only. In category A. Will you remember this? Yes or no? Now you have to correctly identify that to which category of fund the donation is made. Only then this calculation you will be able to do correctly. Otherwise this calculation will go wrong. And please don't apply your mind. If I have told you to calculate in this manner, calculate in this manner only. Don't try to be over smart. Why? There is no time to be that right now. Okay. So always do the calculation in such a way, but you will have to identify which category donation. 5 donations are given. Which is category A, which is category B, so that you can write the amounts correctly in correct places. Getting my point? Then calculation is very easy. Getting my point? So one question we'll see. See, Shiva aged, senior citizen or not a senior citizen? Gross total income of, comprising of income from salary and household. Say thank you. GTI is also calculated, and in that GTI there is no special income. All the incomes are normal. Yes or no? And from the entire GTI you can claim chapter 6A deduction. He has made the following payments and investment. Number 1, premium paid to insure the life of his major. Oh, daughter was major, sir. So what? Major or minor, she is your daughter only, no? Sir, sometimes they will give you married daughter. So after she gets married, she does not remain your daughter. She is still your daughter, whether married or unmarried, major or minor. For your daughter, for your child, if you are making the payment for life insurance premium, will it qualify or it will not qualify? ATC, qualify. How much is the value? 10%. Why 10%? Because the policy is taken on or after 1st April 2013. Yes or no? And daughter is not handicapped. So I will take 10%. So 10% will be 18,000 should be the maximum amount of premium. How much you have paid? 20 will not qualify, 18 will qualify. Yes or no? Medical insurance premium for self and spouse, will it qualify? The entire amount will qualify. Yes or no? Under section 80D. Next one, donation to public charitable. Can you say charitable? Can you see charitable? How many categories? Which category? So 80G deduction will be available or not available? Available, because the amount is more than 2,000 and it is also paid by other modes other than cash. So this entire amount will qualify under 80G. Yes or no? But it will go in category D, charitable purpose. LIC pension fund, 80CCC, 80CCC. Then donation to national, 80G. Category A, amount is more than 2,000 and fortunately it is by check. Now donation to Prime Minister. Draw. So 80G. How much is the amount? 25,000 by check. Yes or no? And it will be category B because it is Prime Minister's draw relief fund. Yes or no? Donation to family planning. Category C. Are you able to identify? Category C. Now this will be 80C. Full 1 lakh. Compute the total income. If he exercises the option of shifting out. Very difficult. Very difficult question. Or easy? See, GTI is 7 lakh 75. Pay attention, everyone. GTI is. Now, in this GTI, any special income is there? From which chapter 6A deduction are not available? No. Enter GTI is normal, and from this GTI I can take chapter 6A deduction. Minus. Chapter 6A. First deduction, can you see 80C? 80C, can you see? How many amounts under 80C? Two amounts. One is 18,000 and second one is 1 lakh. So 1 lakh 18,000 or 1 lakh 50, whichever is lower. So 1 lakh 18,000. Then 80CCC also you can see. 80CCC was how much? 60,000. 60,000 or 1 lakh 50, whichever is lower. So 60,000. Can you see 80CCD1? Yes. Tell me, where do you see that? 80CCD is not there. So it will be nil. So then why did you write? Because all the three taken together is 1,78,000, cannot be more than the overall limit of 80CCE, 1,50,000. This or this, whichever is lower. So tell me, how much will be the deduction? 1,50,000. Getting my point, sir? Understood? So all these three deduction taken together, maximum 1,50,000. Any other deduction can you see? 80D. 80 for yourself and your spouse. How much was the premium? 26,000. Neither your spouse nor you, none of you senior citizens. So the maximum limit will be 25. 26 or 25, whichever is lower. 25,000 will be under section 80D. Apart from 80D, any other deduction you can see? Apart from 80G is there, no? Hello, sir. 80G is there, no? Okay, sir. So we'll calculate 80G. Now under 80G, how many categories? A, B, and then C and D. A is how much? Total of A, how much? Total of A, 25,000. Total of B, 25,000. Total of C, 40,000. Total of D, 50,000. Wait. This 25 will fully qualify? This 25 will fully qualify? Wait, I will write down like this. 25 fully qualify. And this 25 will also fully qualify. Out of this, 100%. And out of this, 50%. Yes or no? This will fully qualify, this will fully qualify. No. First I will have to check. Total is 90,000. Will qualify subject to maximum 10% of adjusted total income. In your calculator, on your calculator, take GTI. Take GTI, 7,75,000. Any LTCG there? Not there. Any STCG 111 there? Not there. All deductions other than ATG. Can you see? 1,50,000 and 25,000. All deductions other than ATG is 1,50,000 and 1,50,000 and 25,000. Reduce. 6 lakh. Not 6 lakhs. 6 lakh into 10%. 60,000 should be the maximum amount. 60,000 should be the this or this, whichever is lower. So the total qualifying amount cannot be more than. So can I say 40 will fully qualify? And out of 50, how much should I qualify? Only 20. Because this 40 will be allowed 100% and this 20 will be allowed 50%. This will be allowed 40,000 and this will be allowed 10,000. And sorry, here it will be 25,000 and here it will be 12,500. Can you total all of them? 87,500 is the total amount of deduction under ATG. Now do you have GTI? Take on your calculator GTI. Minus 1,50,000, minus 25,000 and minus 87,500. 5,12,000. 5,12,000 is your total income. What are you supposed to calculate? And what is the amount of total income? Very difficult, no sir? Now the only difference in the question will be, instead of giving you the direct figure of gross total income, they will give you the details of salary. Calculate salary. They will give you the details of house property. Calculate house property. They will give you the details of IFOS. Calculate IFOS. Add all of them, you will get 7,75,000. And then whatever calculation is there is in front of you. Or they can give you the details of PGBP. Calculate PGBP. Additional details of IFOS, calculate IFOS. Additional details of house property, calculate house property. Add all the three heads. If set off is there, if clubbing is there, apply those provisions. You will get 7,75,000. Ayyo, understanding or not? Very difficult question, no? One more question. But before that, take a small break. Take a small break. Small break means how much? Huh? Take a break for 20 minutes and within 20 minutes come within 20 minutes.